Hello traders and welcome back to ChrisFX. Today I will show you how to find the best institutional order block to trade from. But for the moment, let's roll the new intro. And here we are on GBP USD. We are starting from the daily time frame. As you can see, we are breaking structure towards the downside. We are moving in a huge downtrend. We have a break of structure right here. We have breaks of structure above here. Everywhere there is a break of structure. Right here we are breaking structure. We are breaking structure right here. So we are moving in a massive downtrend. What we are expecting to see now, of course, it's another break of structure below this structure right here. So let's see if we have a break of structure, and then I will show you how to identify the right order block to trade from and not get trapped into order blocks that are meaningless. So let's see, we have our break of structure, as we can see right here. Now many people were gonna go and they would identify this one as their order block, and they would wait for price to retrace back to this point, and then they would look out to take some trades from there. Even though this might work in smaller time frames for very small trades, this is not the right order block to trade from. And as you can see, we have another small break of structure right here. Okay, we have this thing right here as well. So there is confusion as to which order block people are gonna trade in this occasion. So since we have this break of structure, people are gonna go and identify this part as the order block to trade from, or this one, or they don't know if it's actually this one, the right order block to trade from. First, I will move forward with the price action, so you can see how this plays out, and you will see how and why this one, the last one, is the right order block to trade from. First, I need to mention, as I mentioned beforehand, that we have some small reaction right here, so there might be a small chance to capitalize out of these trades, but it's not the right way to trade. The right way to trade is from this order block right here. Let's explain the reason why. I'm going to be deleting all of these lines and highlighted areas. What is that makes an order block valid, or in other words, a more possible area from which price might retrace? It is the concept of manipulation, and you will see what I mean. I will scale down to the 4-hour time frame. Go ahead and like and subscribe to my channel for more free educational content. You don't want to be missing out any of my free educational content. We will go to the exact same areas. Do we see any manipulation over here? Not really. We don't see any manipulation out of this area. Do we see manipulation from these areas right here? Not really, we do not. And I will explain why, but we do see manipulation from this area right here. And I will zoom in and I will explain why. Because we see liquidity is being formed right above this area right here and right above this area right here as well. So there's a bunch of people who sold right here. There is also a bunch of people who did sell in this previous area. So they sold, let's say, somewhere around here with the stop losses right above this previous area. And there is another bunch of people who just sold in this area right here. Okay, there is a bunch of those traders who entered there and they targeted whatever they wanted to target. Let's say they targeted all of them the same area right here. But whatever they did, there is millions of traders out there, so there is people who entered trades right here because they saw equal highs being formed, so they entered here. From this one, they saw a reaction out of this candlestick right here, so they entered here. And from this occasion right here, they entered right here. Especially in this occasion that they saw this wick passing above the previous structure, they thought this was the manipulation, this is the right time to trade, and all of them were mistaken. Why? Because of the concept of manipulation. In order for the banks to trade, in order for the banks to place their sales, their massive sales, they want to create liquidity to induce those sellers, those early sellers, into selling, and then they're gonna buy massively into their position, which they did with this wick right here. And if I stretch this thing even more, you see the concept of creating equal highs, we will call it, even though it's not exactly equal. Okay, we have a lower high compared to this one, and we have it right here. We retrace back, then we retrace with this one, so there's people who entered even here in this area, then we break a little bit above, trader center again, and then we break above all of these areas. So we grabbed the liquidity that was lying above all of these areas right here. So which is the right order block? I would go ahead and I would highlight this area right here. All of this area actually is the thing that I would highlight, this huge area right here. Even I would go down to the 1 hour chart and I would try to identify smaller order block areas, but again, you don't know if price is gonna react from this one right here or from this whole area, so I will leave this whole area marked as it is, and I will move forward. Of course, we can narrow it down to this week plus this week right here. I will extend this thing. I'm back at the daily time frame, and you will see how perfectly price will come back and retest this area right here. So let's check this out. You see, we came back, we retested this area. One way to enter, if you don't have time to be in front of your charts the whole day, you can go ahead and enter on the daily time frame, even though this stop loss is huge, 62 pips, with a pending order, with a sell limit order, and you can target this thing right here. It's an 8-to-1 risk to reward. Another way to go about it is to take your gun box and go ahead and place a trade at the 50% level, which in this case wouldn't activate us into the trade. Okay, and now we will see another way that you can also enter. Once price retraces to this area, to this daily area that we suspect is the right area because of this manipulation right here, we are waiting to see breaks of structure to the downside. Okay, this is the exact same logic, and we see structure being broken to the downside right here. We are expecting to see more areas being broken. Okay, let's see moving forward. Okay, now that we broke all of these areas, we have identified some order blocks right here. This would be one, this would be another one right here, which was tested partially probably right here, but it's still valid for trades. Let's move forward. Okay, this one is tested, so people might have entered right here with a pending order already, and then they could go ahead and target the lows. Let's see what happens. But again, I would be waiting for another potential entry in this occasion. So here you might be able to close profits, let's say at 4-to-1 risk to reward, and then extend it. But then we can go ahead and wait for price to retrace back to these areas again to retest those areas. And there you go, it went ahead and it retested this area right here. I went very fast with it, so I apologize for that. We have one trade that we took right here, we closed partials, and for the rest of it we got stopped out. But look at that, I will delete this line. We came up and we retested this whole area. You can enter on the first bearish candlestick, as we can see right here, with a stop loss right above the area, or you can place a pending order at the 50% level of this area by the use of the gun box or the Fibonacci retracement tool. Okay, let's see the two types of entries. One, we would enter manually on this bearish candlestick with a market execution, and for the other one we would enter on the 50% level with a pending order. We wouldn't even be in front of our chart. And let me extend those ones because I want to see the difference in the risk to reward. So I'm gonna extend both of those down, and I will go back to the daily time frame. I will switch back to the daily time frame. I will place a horizontal line to the low right here, and let's see how much we would have made with both of these trades. First of all, the initial trade where we would be entering on the daily time frame took an 8-to-1. Let's move forward first of all to see how these trades worked out. Okay, this one took a 9.4-to-1. We entered on the 1 hour time frame, a safer entry. And then we are on the 50%. You can place all of those trades. Remember that we can place all of those trades. And then we have this trade right here on the 50% level on a daily zone where the inducement happened. We scaled down to the 1 hour time frame. Okay, when we saw price came back to the daily area, we waited for more breaks of structure. Price retraced. We could be entering with a gun box at the 50% level of this area, and then we would get an 18.5-to-1 risk to reward. This is how to find the right order block to trade from. You have to wait for this inducement to happen. If you wait for this inducement, which is more clearly visible on smaller, lower time frames, because this price action took place on the daily time frame, but every time you can go and scale down to 1 hour or 4 hour time frame, so you can identify this inducement, this manipulation that we see right here, which makes things way easier. Hopefully you liked this video. This is the strategy on how to find the best institutional order blocks to trade from. This is gonna do it for today. Thank you all for watching. Until next time.